Hello, everyone. Thank you for joining us this Saturday morning, and welcome to this Specialist Trading educational presentation. Now, today I'd like to talk to you and actually share with you some of the entry rules to a strategy that actually buys when everyone else is selling. Now, I know a lot of you probably say, well, wait a minute, Steve, that goes entirely against your trading philosophy. You're always saying never try to pick tops and bottoms, never try to buy low or sell high. That doesn't really work over time. Well, this is a little different because this strategy actually determines when to buy when everyone is selling while the trend is still up. And I'm going to show you by applying a proprietary setting to a very generic trading tool how you'll be able to identify these setups. For example, let's look at this chart right here. Here is a current chart of Apple just going back to the beginning of December, okay, just a couple of months ago. Now, as we can see, we have kind of a nice steady uptrend going here. You say you draw this line, here's your uptrend line. And then at this point, either some news comes out or something happens in the market which causes it to break that uptrend. This is where most traders would say, well, we have a lot of sellers, a lot of selling pressure. We broke that nice uptrend line. I guess I should sell my position too, or maybe I should even short because now's the time to get out of Apple, first week of December. Well, with the rules I'm going to explain to you today that you'll be able to start applying as early as Monday if you'd like, you would have seen that a buy signal was actually generated where everyone else was selling. Now, this was the first week in December, and potentially if you had used that buy setup, you could have gained potentially 60 points in 2 months in Apple. Now, I know a lot of you say, well, Steve, how can I learn this strategy if I become a course member, but I may have questions, I may want to check my work, I may not really know how to use or access this proprietary indicator that you're talking about. Well, that's why I developed with Pro Trader Strategies, we developed the PTS Primo charting platform. This is an educational platform that actually teaches you how to buy when everyone else is selling. And I'll show you all the examples, and all the displays today were taken from our snapshots from the PTS Primo charting platform. So welcome once again, and thanks for taking time out of your Saturday morning. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 13 years, and I should say 16 years. And 9 of those years I was a specialist. A specialist is someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, you had to go up to the trader who specialized in making a market. That's where we get the name specialist trading. Now, in my 9 years of making markets, I traded through the crash of '87 and the bull market that followed. So I've seen and traded just about everything and anything you can imagine. Anything that is some new system or some new indicator. Trust me, it's been already around before. They just rebranded it, relabeled it. And so in my 43 years of trading experience, I know what works in terms of consistency and I know what doesn't. And that's why I teamed up with Pro Trader Strategies so that we could, help you save your hard-earned time and mostly your hard-earned money so you wouldn't have to be searching for that holy grail when it's really right here in front of you. It's sound fundamental education. You see, that's what most traders are missing in their trading plans. It's not the perfect system or the perfect tool or the perfect market. It's education so that you can make your own trading decisions. That's the gap we fill. That's the service we provide at Specialist Trading. We are first and foremost an educational company. You'll see in today's presentation how I really want to educate you with the entry rules to this strategy. Now, before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, plus I'll show you the entry rules to this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, once again, I'd like to invite each and every one of you. I see a lot of new names here this Saturday morning, so if you haven't done so already, please feel free to follow us on Twitter. Every day I post different information, educational information, anywhere from signals our strategies have generated to little bits of financial wisdom. In fact, earlier this week, I showed a setup with one of our proprietary tools called the PET-D that signaled a change in trend. Now, this was before the market really went down yesterday or prior to that. And so these are kind of educational tools we talk about on Twitter, but mainly it's there for you to learn and to find out more about what we do. So lots of great free information. Feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are different from other webinars you may have attended. I know a lot of you like to go to webinars. I know I did. We didn't have webinars when I first started trading some 43 years ago, but I used to get newsletters and used to watch all the pundits on TV. And you're always going, finding out what they like, and maybe you'll copy exactly what they're doing because most likely they have all the answers, right? And they never fail. So whatever he wants to buy, I'll buy. Whatever they want to sell, I'll sell, okay? Well, if you've come here today looking for that, you've come to the wrong place, okay? That's not what we do. This goes entirely against our philosophy. And someone would say, well, Steve, why can't I just copy what you're doing? Or why can't I just see what you like or what market you trade? Well, it's my opinion in 43 years that if I'm trying to make you a consistent trader so that you can be trading not just a couple of years and have a good couple of years, but if you can be trading for maybe a couple of decades or maybe 3 or 4 decades, the easiest way to destroy that is for you to blindly follow whatever I'm or someone else is doing. I mean, think of it. The entire industry is based on that concept where you go to a website or you go watch someone on TV or you subscribe to some blog and you listen to what they like or what they don't like or what that market they're trading or what time frame, and then you just blindly follow whatever they're doing. If this concept works so well, then why do 80 to 85% of all traders fail? Because it doesn't work. Because no two traders should ever trade alike. You should be making your own trading decisions. Now, most traders will say, well, Steve, I don't know how to. I don't have enough experience. You know, I don't have an education like you. I didn't work on the floor. I didn't graduate with a degree in economics. You know, I just do this on the side to generate some extra income. Well, trust me, I didn't graduate with a degree in economics. I had no experience. I walked onto the floor for a summer job. I learned everything on the floor trading. And my first 2 years, I struggled just like most of you may be struggling right now. It wasn't until I had a few good mentors that taught me the same thing that I teach my students. And one of the first things they taught me was, Steve, we're not going to just let you piggyback on our trades because once we leave or stop trading here on the floor and go on our own, you're not going to know what to do. You have to find your own way. Now, the good news is at Specialist Trading, we provide all of that information and we help you so that you can determine your own ways. You can find out if you're an aggressive trader, if you're a conservative trader, if you'd like to trade pullbacks, if you'd like to trade continuation patterns, if you like to trade futures, if you like to trade stocks or currency pairs. But ultimately, we provide you with that so that you can decide, not us. So that is our goal at Specialist Trading and Pro Trader Strategies. You see, our goal is not to force feed you signals, not to have you come to our website on a nightly basis or come to our chat room or trading room, which we don't have and don't believe in, and just blindly follow someone else and say, well, they must know what they're doing. So if he really likes this stock or doesn't like this future or doesn't like this currency pair, I guess I'll do the same thing. Remember, that is a recipe for disaster and the reason why most traders fail. My goal is to teach you how to trade so you can make your own trading decisions, so you can be in charge of your own trading destiny. This, in my opinion, is the only way one becomes a consistent trader, not with some perfect system or not with some perfect indicator, but by making your own decisions. That's the specialist edge, the same edge that was taught to me some 43 years ago and what has sustained me. And hopefully, as your educator, I'll be able to do the same for you. Okay, so that's our philosophy of specialist trading. Now, since this is a classroom today, I'm going to teach you the first couple of rules to this entry method. I want to take all of your questions. I know you'll probably have some, but please wait till the very end of class today. We have a good sized class this Saturday morning. I don't want to take all of your morning. So if you have a question, write it down or try to remember it. And I promise I'll get to it at the end of today's class. Now, the only question I will answer is this, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical issues, oftentimes if you turn off your computer or log out of GoToWebinar and log back in, things will be cleared up. But if you're having difficulty, don't worry. We'll send each and every one of you a link to this recording. Okay? All right. So keep the questions to the very end. With that stated, let's begin today's class. Now, what I'm going to be talking about today is strategy number 1. I'm going to be giving you the preliminary entry rules. Now, I know a lot of you are saying, gosh, after I've learned these entry rules, Steve, this is amazing. Now, where do I get out and where do I place my stop? Well, I can't give you all of that information. It wouldn't be fair to our literally thousands of students around the world who already have strategy number 1. But I'll talk to you about a great offer we have at the end of the presentation where you can become a course member of this particular strategy, plus a lot more included with a great deep discount. But today you're going to get the preliminary entry rules. So if you have any experience trading, you'll have an idea about where you want to exit and where you want to place your stop. Now, let's talk about some of the highlights of strategy number 1 before we go into these rules. Firstly, it's a trend following strategy. So even though we may be trying to buy when everyone else is selling, we're still buying within the trend. So as you can see here, it's designed to buy low while you're in an uptrend. And it's designed to sell high while you're in a downtrend. Now, the way it does this is by applying a unique indicator. Now, I'm going to be sharing that with you. Usually we reserve that for the members of the Strategy Number 1 course, but you'll get all the information and you'll know exactly what the application is. Now, remember, Strategy Number 1 can be applied to any time frame, any market, and any direction. When we first started specialist trading and I teamed up with Pro Trader Strategies, our main focus was on stocks. So as you'll see later on in our promo, it'll say stock strategy number 1. Well, that doesn't apply anymore because we now have students around the world who are trading it with futures, with currency pairs, with commodities, with Bitcoin. So basically, strategy number 1 can be applied to any time frame, any market, and any direction. Now, with all of our methods, we ask that you please learn this strategy first by paper trading. Now, I know after I explain the entry rules to you today, you'll go want to research it over this weekend and then you'll want to start trading it Monday morning, which you can if you'd like, but I would really suggest that you don't do that because most traders jump in too quickly. They don't study all the rules. Maybe they're using the wrong indicator or the wrong settings, and then they have a series of losses. That's when I get emails and people will say, Steve, this stuff doesn't work. I want a refund. You sold me something wrong. And then I asked them to send me examples, and they implemented the rules entirely incorrectly. So that's what usually happens when you jump in too quickly. So please paper trade this first so that you fully understand the process and also so you can understand what market you want to trade with. Maybe you don't want to trade it intraday. Maybe you want to trade it on daily bars or weekly bars. It's entirely up to you, but you can only find that out through paper trading. Now, lastly, our edge at specialist trading is consistency. So someone would say, oh, so that means all the trades are winners, right? They're very consistent. No, that's not what consistency means. Consistency is an awareness that you will have losses from time to time. And guess what? There's absolutely nothing wrong with having losses. I had a loss a couple of days ago, and I made it back, entirely back, plus more in yesterday's market on the downside. So that's what consistency means. Being totally aware that you will have a loss every once in a while, but being confident in your strategy and its ability to recoup those losses. You see, most people don't get consistent strategies. They have a strategy that promises you the world, and maybe every once in a while you hit this home run and you think, wow, this is amazing. I made so much money on this one trade. And then guess what? The next 2 trades are losers and you give everything back. That's not a consistent method. A consistent method is a 2-step forward, 1-step back. The 2-step forward being winning trades, the 1-step back being a losing trade. But the ability to recoup that loss sometimes quicker than later. So that's what we're looking for. Consistency in a method, because consistency is what will sustain you. Not some fly-by-night system that promises the world and has some really nice trades, but then gives it all back, and then you're right back to where you started, or even winding up with less than where you started, okay? We all been there before, all right? Okay, so those are the highlights. Let's talk about the indicators we'll be applying with strategy number 1. Only uses 2 indicators. The first is the 50-period moving average. Now, we call this our buy-sell line because it tells us whether we're going to be buying or selling. If price is above the 50, we're only going to be a buyer. If price is below, we're only going to be a seller. So that's our buy-sell line. Our second indicator is a 21-period Donchian channel settings. Now, some of you may have the Donchian channels already on your platform. I know TradeStation has it. I believe NinjaTrader does. Some other platforms may not have it. Just do a Google search. I believe there are some free platforms online that have the Donchian channels. You just want to set the period to 21. Usually it's set at a 20 period, and that's okay, but we've found out that the 21 seems to work the best in overall all markets and all time frames, okay? Now, here's what the Donchian channels look like. If we see a nice uptrend in this generic chart right here, when we apply the 21-period Donchian channels, they look like this. There are 3 channels, a top, a middle, and a bottom channel, okay? And they have this kind of stair-step look to them. Here's the main difference, though. They are not in sync. In other words, you may have, as we see on the top Donchian channel, a sideways movement, while the middle is going sideways, then higher. And same with the bottom one. Does that mean they're out of sync? No, we're not looking for them to be in sync. We just want them all going in the same direction. And when one is going sideways for a long period of time, it does not mean that there's no direction. You have to see where the previous setting was. If the previous setting was lower, then all it's doing is it's still in an upward direction. It's just paused from coming from a lower point. So that still means it's in an upper direction. And what we want to see is that all three of these are going in the same upper direction when you have an uptrend, and then when a downtrend ensues, you want to see that all three are going in the same downward direction. Remember, they do not have to be in sync. As we see here, this is going sideways, and this is going lower, and so is this one going lower as the top one is going sideways. That's okay, because they are still in the same downward direction. And someone could say, well, how can they be in a downward direction, Steve, when these two are going down and this one is going sideways? Because you just look at the previous setting. If the previous setting was higher, it's still in a downward direction, okay? So this is what the Donchian channels look like. And I know a lot of students will say, well, Steve, I looked at my platform, they don't have the Donchian channels. Well, I would, go to customer support and ask them to apply it, or else, once again, do a Google search online. I know there are some free platforms that do offer it. But please, do not try to replace it with moving average envelopes or with Keltner channels or with some other tool, because I've tried it before and I've experimented for the last 40 years looking for other tools that could accommodate it, and trust me, nothing works as well as the 21 period Donchian channel. So in order to apply this strategy correctly, you must use the Donchian channels. Okay, so let's go and share with you the setup rules for entry. Remember, we cannot divulge all of the stop placement, exits, and money management, but I can give you the entry rules, which in and of itself are extremely important, okay? Let's look at buy setups step by step. Okay, step one, as I said earlier, price must be above the 50-period moving average. This is telling us that the overall trend is up. And at the same time, all three Donchian channels must be headed in the same upward direction. So once again, as we look at this generic chart here, we see the 50-period moving average, our buy-sell line is plotted. We are above it, obviously. And then once we add the Donchian channels, we see that, once again, they're headed in the same upward direction. Remember, they do not have to be in sync. As you see, these started to go up, the middle and the top are going up while the bottom was still going sideways. Does that mean they're not headed in the same upward direction? No, because while something may be headed, two or three may be headed, or I should say two may be headed in the same upward direction, just look and see where the last setting was. It was lower, so it's still at a slower rate moving in an upward direction. Okay, rule number two now. The rising price bar begins to decline. So as price is going in sync with those three Donchian channels, it's rising, but all of a sudden it starts to decline and now is completely below the rising midline channel. This is going to be your setup bar. Let me share with you what that looks like. All right. As you can see, price is here and it starts to rise, okay? As it rises, many times it will touch and hug the top Donchian channel. But then all of a sudden we go into the sell-off phase, all right? This is where everyone else is selling. All right. As it begins to sell off, it touches and intersects the middle line. That's okay. Nothing has happened yet. It's intersecting the middle line, but now we have a bar that is completely below. It's not touching the middle line. It's completely below, but the rules are still intact. We're still above the 50, and all three Donchian channels are still rising. So if we see a bar here that is not intersecting the midline at all, but all the rules are still intact, that is our setup bar. Now, someone could say, well, what do you mean by setup bar? What does that mean? Well, that's the bar where all the requirements come into play, and that's the green light for you to enter. Now, there are many different ways to enter. I'll just share with you a couple of ways. And in our course, we have upwards of 7 different ways to enter. Let's say you could just buy at the market. If you wanted to, you could do that. Or you could place a limit. Let's say you could place a limit somewhere down here if you wanted to buy at a lower price. Or let's say you could wait for it to trade above the high of that setup bar. It's entirely up to you. Remember, that is our philosophy. We're not trading for you the way so many other websites do, and they tell you you have to buy here, you have to sell here, you have to place your stop here. That is something you have to decide. Now, we give you all the information, where 7 different entry points, 7 different exit points, 7 different stop placements, but ultimately you have to decide, because remember, as I stated, the only way one becomes consistent is by being comfortable with the method, and that comes from you making the choice. So you have to decide how you want to enter, how you want to exit. So as you can see here, that's our setup bar, and look what happened, okay? And someone could say, wow, that's just too easy. I mean, don't you have to look at the news? I mean, don't you have to look at the volume, or don't you have to look at the, see what's going on with the institutions, if they're buying or selling this? Well, you can if you want to. Once again, it's not our place to tell you how not to trade. It's just our place to educate you. And if you think those things are important, well, go ahead. By all means, go ahead and use them. But if you're asking me personally, I stopped looking at news. I stopped trading with the institutions. I stopped looking at volume. I stopped worrying about earnings over 4 decades ago. And if I'm still here, then obviously there must be something to that, whereas you don't really need those things. So it's entirely up to you. But if you're asking me, is it a requirement? The answer is absolutely no. The only thing you need to focus on, and the only requirement, is the chart in front of you. That's the source. That's the source of everything you're trading. So why would you look anywhere else for answers other than the source, which is the chart right in front of you? Now, today we're going to focus mainly on some buy setups, because we've known until this last week the market has been going straight up, and we've had a lot of buy setups in this. But let's say you're interested in selling. Well, it doesn't mean that you can't use this as well. We can give you this step-by-step sell setup rules, okay? They're just basically the same thing. We just turn the rules upside down. Now, step 1, we want to see price below the 50. With all of our courses, I would say just about 95% of all of our strategies rely on the 50-period moving average. In other words, we will never be selling if price is above the 50, and we will never be buying if price is below the 50. I know a lot of you may say, well, gosh, Steve, there are some great sell opportunities at the top and some great buy opportunities at the bottom. And I'm not going to disagree with you. There are a lot. But we're trying to make you a consistent trader. We're not trying to educate you so that you have some big home run, and then, like so many of our new students tell me, they give it all back because it worked once, but then it didn't work anymore. That's what happens when you buy below the 50 and sell above the 50. You'll get some great trades every once in a while, but just like the slot machines in Vegas, they're designed to keep you there, because if you stay long enough and continue to do that, you're going to give it all back. It's the same way with trying to buy below the 50 and sell above. So at times you may kick yourself and say, gosh, I would have loved to, sold that, but Steve says not to do it, or I would love to have bought it. But over time, this is what will sustain you as a trader, not buying below the 50 and selling above. So if you're selling, price must be below the 50. And we want to see all 3 of the Donchian channels headed in the same downward direction. They don't have to be in sync. They're just in the same downward direction. Once again, we're looking at this generic chart here. Price is below the 50. Now, when I say below the 50, many times you'll see, and I think in some examples, you'll see price intersecting. That's okay. What really matters is your entry is below the 50. But in this case, this is more of an ideal scenario where we are well below the 50, and there's no doubt that we are below, okay? Now, we want to see, now that we've seen that we're below the 50, we know we're not going to be a buyer. We're going to look for all 3 Donchians to be headed in the same downward direction as they are. Remember, they don't have to be in sync. These 2 are headed lower while this one is going sideways. So that's obviously not in sync. But where was the last setting for this top Donchian channel? It was higher. That just tells us that it's just going at a slower pace, but it's still headed lower. So now all 3 are headed in the same direction. So we go to rule or step number 2. The declining price bar, now it begins to rise. This is where everyone is tricked and they think, hey, we've bottomed out. It's time to go long, okay? And this is why most traders fail, because they're following what someone else tells them to do in a chat room, or some guy on TV, or some institution. And this is actually a selling opportunity, because now you're looking for a rise, and you're looking for a bar that is completely above the midline channel that is still in a descending mode. So as we can see here, price is selling off and everyone is very bearish on the market. All of a sudden, it looks like you hit some support. This is where you say, oh, this is major Fibonacci support, or this is where the banks are buying. And as you start to rise here, you say, boy, I'm going to go long this. We just bottomed out. And that guy in that chat room says it's time to buy. This is where most traders fail. Why? Because you are out of sync with the 50-period moving average. If we are below and price is rising, that is not a buying opportunity. That is a selling opportunity. Now, as price rises, it starts to touch and intersect the downward moving middle channel. And now we find a bar here that is completely above and it's not touching at all. This is our setup bar. As we rise, we find that bar, and this is the bar where all the requirements are made so we can go short. Once again, it's up to you how you decide. We give you all the information in our course. You can sell at the market. You can wait and have more of a conservative confirmation, wait for it to trade one tick below, or you can just place a limit. You say, you know what, I still think it's going to go up higher. I'll get short up here. It's entirely up to you. What makes you feel the most comfortable? In my 43 years, the one thing I've learned is you will never, no matter how consistent your method is, you will never be a consistent trader until you feel comfortable with the method you're trading. So many traders blindly follow a guy in a chat room or a trade room or some guy on TV, and they don't feel comfortable. That's why they're losing money, because it's out of sync with their persona. You know, you may be very conservative, maybe want only one trade a month, and this system or this guy is telling you to trade 5 times a day. Well, even though it may rack up a ton of winners, you will never be consistent because you will not feel comfortable. You'll probably be implementing the rules incorrectly because you just don't feel right. And that's a recipe for a disaster. So you have to find your own way, and we help you do that in our course. So we have a setup bar to go short, and look what happens. Where everyone else was buying, and that guy in the chat room says, well, we bottomed out. We have major support here. We've got to buy. Look what happened. Weeks later, it was already lower. So now you understand the concept. Let's look at some strategy number 1 trade examples. And because there are just so many, let's look at a specific group, which is the FANG T. That's Facebook, Apple, Netflix, Google, and Tesla, the darling of the market as of lately because it's been basically defying gravity and going straight up. Let's see what would have happened had you already had this strategy in your arsenal, let's say a couple of months ago, and applied it to any one of these stocks, okay? And remember, everything going to be seen now is exclusively on our PTS Primo charting platform. We designed this to make trading simple. It automatically generates these signals when everyone else is selling, okay? So let's look at Facebook. Now, here's the way most traders would analyze this chart. This was in the middle of December, just last year. Someone could say, well, Steve, we had a really nice run up here, but look at this. You know, I took that $10,000 online course where they teach me about what the institutions are doing, and this is major resistance. They're all selling right here, and they don't like this stock anymore. They think it's going to come back down way lower, so I'm not going to buy this thing. I mean, it looks terrible. And then someone else would say, well, you know what? I'm a candlestick trader, and I see right here a bearish engulfing pattern. This is extremely negative at the top of a big run. So I'm going to go bearish right here myself. In fact, I'm going to buy the puts. All right. So obviously you're saying to yourself, well, we're in a downtrend, right? We had maybe a higher low right here. Now we close below there. So that's a definite confirmation that we're going lower, right? All right. These are all ways that yours truly used to justify trading some 4 decades ago, not just 4 weeks ago or 4 years ago. 4 decades ago, I was using the same analysis that many of you are probably using right now. And it didn't work for me 4 decades ago. So why do you think it's going to start working miraculously right now? It's not. There's absolutely no consistency in any of those methods if you use them incorrectly. Now, what does strategy number 1 say? Well, the first thing we want to do is apply the 50-period moving average and ask yourself, where is price? Is price below it? No, price is above it. So what did I say before? If you have a sell-off and price is above the 50, that's not a selling opportunity. That's a buying opportunity. See, you have to change your way of thinking. Now, if it's a buying opportunity, now we apply the dodging channels, which is simply just a click away. If you look at our green strategy tab here, all you would do is click on strategy number 1, and the dodging channels appear. Now, which direction are they all headed in? Well, they're all headed in the same upward direction. And as they're all headed in the same upward direction, all of a sudden we start to get a sell-off. We intersect the midline, but then we bounce up again, and then now we intersect and we have a bar completely below, not touching. That is your buy setup. So where everyone else said, well, Steve, we broke this low right here. You got to get out. The institutions are selling. You're saying, well, go ahead and follow what you've been following. There's really no consistency in those things. The market, I don't follow those things. I only follow one thing. That's the chart in front of me. And the chart in front of me, that market I'm trading, is saying it wants to go higher. So you could have bought in the middle of December and potentially captured 30 points coming into this past week, okay? Now, did I mention anything about interest rates or earnings? Did I mention anything about volume? Or were any of the requirements about what the banks are doing, the institutions, are they buying or selling? Or did I say anything about support and resistance? Absolutely not. Those things are in no way required, okay? I stopped looking at them 40 years ago, and that was the best thing I ever did because that's when my trading started to become consistent. So remember, once again, we are not here to tell you how not to trade. We're only teaching you things that have stood the test of time. And those, old, unconventional and worn out ways of trading are actually, not required at all. If you want to continue to use them, feel free to do it. But in my opinion, they'll only get in your way. All right, let's look at the next stock in the series. That would be Apple. Okay, this is the one we looked at earlier. Remember, we thought there was a nice uptrend and then some news or something happened and it broke down below that. That's where most traders would want to sell, right? We broke the uptrend. Well, we ask ourselves, where's price in relation to the 50? It's above. So is that a selling opportunity? Absolutely not. It's above the 50. It's a buying opportunity. But we still need it to meet all the requirements of our structure. So we click on strategy number 1 in our platform. We add the Donchian channels, and as you can see, they're all headed in the same upward stair-step direction. Now, as price is rising, many times it touches and hugs the top Donchian channel, but then look what happened here. We sold off, and we are not touching that middle channel. So this is a valid setup. You can buy at the market, place a lower limit. It's up to you, but that would have been a nice trade at the beginning of December, just 2 months ago. Because the stock, as we all know, Apple has been going higher. It went up 60 points coming into this last week. All right, the next stock in that series is Netflix, okay? The exact same scenario here. We're above the 50. All the 3 Donchians are headed higher. As we go up, we touch and hug, but then we start to sell off. This is where all the traders get nervous. They see a bearish engulfing pattern. They see we broke this major support right here on the close. So they say, we got to get out. This is a selling opportunity before it goes much, much lower in Netflix. Whereas you, now that you're educated and you've learned how to listen to the chart in front of you and you've really weeded out all of this useless noise of traditional wisdom that really shows and holds no levels of consistency, you say to yourself, well, where everyone else is selling, I'm going to be buying because that's a valid setup bar. And you could have purchased right there, bought the calls. We realize these are expensive stocks, but you could have bought some calls, out of the money calls, because Netflix has gone up 65 points coming into this last week in January. The next stock is Google. Okay, I know it's an expensive stock, but just to show you how this will be applied to any level a stock, either a $20 stock or a $300 or $400 stock or even a $1,000 stock. The same principles apply. We're above the 50. We start to sell off and touch the middle line. Now we have our complete bar that is completely below. Now it doesn't matter if it's touching the lower. We just do not want it touching the rising middle line. So that's our valid setup bar. You could have bought some calls way out of the money if you wanted to. And it went up 200 points coming into mid-January, okay? Lastly, let's look at the darlings of the market as of late. Tesla, even with the market's last couple of days going straight down, Tesla has still been going higher, all right? Now, someone could say, well, that's great fundamental news, the great stuff about the company, their earnings are going to be amazing. Steve, but I wish I would have known that back in November and December. Well, why? Once again, there's absolutely no reason or requirement that you need to look at that. And someone would say, well, then how do you know to buy this? Well, let me share with you. Most traders would look at this and say, well, wait a minute, we're in a downtrend. Look, we had a sell off here. We gap lower. We can't seem to go any higher. It looks like we're going to break this support. But when we apply the first rule, which is the 50-period moving average, we see this as a buying opportunity because we are still above. So this is not a selling opportunity. This is a buying opportunity. So you already would have known on your own that you're not going to sell Tesla. Okay, you wouldn't have to go to a chat room. You wouldn't have to spend money on some service to get signals. You can do this on your own. This is our goal, to teach you so that you don't have to rely on anyone. You're in charge of your trading destiny. Okay, so the next thing you need to do is add some structure in the form of the Donchian channels. Click on strategy number 1 and they automatically appear. Now, are they all headed in the same upward direction? Yes, they are. They're not in sync, but they're all coming from a lower setting. So that means they're headed upwards. Now, as we can see here, where everyone thought this was kind of making a ledge to fall off of, we see that these are actually buy setups. You have one here, another one here, and another one here. So Tesla, at the end of November, beginning of December, gave you 3 chances to get long. It was not only telling you that I want to go higher, it was screaming, I want to go higher. Why not just join me? You didn't have to worry about earnings. You didn't have to worry about economic news of the market. You didn't have to worry about support and resistance. Make trading simple. Trading is really easy. It's really simple. It's the trader who makes it more complicated than it has to be. So with this simplicity, you could have bought some calls or purchased the stock if you wanted to. And as we all know, the stock's been continually going higher, went up 320 points. Now, I'm not saying you would have made all of these points, which I'm sharing with you on all of these stocks, but potentially you could have captured these. Potentially you could have captured 320 points if you still remained in Tesla. All right, now we have some students who took a signal like this and they said, well, Steve, I'm going to use a generic exit. I'll take a quick 10 points and I'm out. That's fine. Others may have said, you know what, I'll wait a little longer and I'll take maybe 50 points. That's fine too. Someone could say, well, you know what, I'm holding on for the long haul, Steve. I've got 300 points in my profit right now. I'm going to stay in longer. That's fine too. Well, then someone would say, well, Steve, which one is right? The right exit point, as well as the right entry, as well as the right stop placement, is the one that makes you feel comfortable. We do not teach nor do we trade systems at Specialist Trading. That means everyone is required to blindly trade, enter, exit the exact same place. Once again, in my opinion, in 43 years of trading, that is a surefire way to lose all your money. You should never trade the way someone else trades. That's why we don't have chat rooms or trading rooms, because they're crutches, because people want to mimic or emulate what someone else does. You should only trade the way you feel comfortable. If you want to get out with a 5-point profit, that's fine. If you want to get out with a $300 profit, that's fine. If you want to place a limit to enter, that's fine. If you want to enter the market, that's fine. The only thing that's wrong is when you blindly follow someone else. That goes entirely against our philosophy. And if you think that works so well, trust me, the entire industry is based on you blindly following some guy in a chat room or some guy on TV. And remember, 80 to 85% of all traders fail. So ask yourself, how well is that working? Now, up until now, we've just shared with you some up setups. Now, trust me, in a downward market or a downward scenario, this works just as well. So let me share with you some other time frames, some other markets, and let's look and see how well this can perform on the downside, okay? Here's an example in SIX, okay? We are now below the 50. So this is telling us the overall trend is down. The Donchins are headed in a lower stair-step direction, all in the same direction. So we wait for the price to rise. As it rises, it intersects the downward sloping middle channel. And now we have 3 chances to go short. This was in the middle of October, and coming into November, we had a nice 10-point drop. We can look at a weekly chart of the euro dollar. I know we have a lot of currency traders. We have tons of currency traders at Specialist Trading in our courses, and they use this strategy as well. We're below the 50. The Donchins are headed in the same downward direction. They're not in sync, but they don't have to be. And as price begins to rise, it intersects, and it is completely above. Now, someone could say, but Steve, we are above here, the 50. Remember, all that matters is that we close below. So we closed below the 50, even though we intersected it. Now, had we closed above, that wouldn't be a valid setup to go short. We have to close below. But since we closed below, that's a valid setup bar. And on a weekly chart in the euro dollar, this was coming in the summer of last year, coming into September, October, that's a 500 pip downward move. That's roughly about $5,000 potentially could have captured per unit. And then lastly, here's a 5-minute chart of the E-mini. This was just this was actually just a couple of days ago, I believe, on the 29th of January. We are below the 50 on this 5-minute time frame. The Donchins are headed lower. As you see, the bottom line, this is where students get confused, and this is why I say you must paper trade first, because the student will say, well, I'm not going to take this because this is not in sync with the other two. Remember, we're not requiring them to be in sync. We just want to make sure they're headed in the same direction. And someone could say, well, how do I know this is headed lower? Because the previous setting was higher. So it came down lower, and it's just been pausing at this sideways rate, but it still is headed lower at a slower rate. Now we see price rise. This is where everyone says, hey, we're rallying. I got to buy this. But you look at this as a selling opportunity. Why? Because the 5-minute chart is below the 50. And look at all these sell setups right here. These were all valid setup bars to go short. and it could have generated a 10-point gain in the next hour or two. All right, that's roughly $500 per contract. If you only had one contract, you potentially could have captured $500 in about an hour. All right, so let's review this. Remember I said you can ask me any question you like at the end, so let's review what we went over. Strategy number one, it's one of our most consistent pullback methods. Remember, a pullback method is a method that buys low in an uptrend and sells high in a downtrend. It does this by using our proprietary Donchian channels setting. Remember, you can apply it to any time frame, any market, and any direction. Our edge is consistency. That means that you will have losses from time to time. That's okay. But we are very confident that you will be able to recoup those losses. But as always, we require, this is not a suggestion, this is a requirement that you first paper trade. Okay, you must paper trade the method before applying real funds to the market. So before you ask me a question, I want to ask you one. Do you think this strategy could have helped your trading this past year? Okay, go back and look at your results. Most likely they're nowhere near you thought you were going to be when 2019 began. Well, we're at the beginning of 2020. Don't you want to turn your trading around? What if you could have strategy number one in your arsenal? Sure, you could trade other things as well, but what if you could also have strategy number one included with your trading plans? Well, we have a great offer for all of you taking time out of your Saturday. We're going to offer you strategy number one course, okay? You're going to get all of our entries, exits, and stops. We're going to teach you an aggressive as well as a conservative version. In fact, today I taught you the conservative version. All right, you can apply it to any market, any time frame. Now, this course usually costs, with all the rules and with everything in the online course, $695. But we're not going to charge you that. We're going to discount that tremendously. I'll tell you in just a few minutes what that discount is. So you're not going to be charged $695. In fact, we're going to throw in something else. We're going to throw in another strategy, strategy 3A. Now, it is an entirely different strategy. Now, when we first taught this strategy, once again, it was mainly for E-mini traders such as myself because it works so well on continuation markets. That's where you get a nice strong uptrend or a nice strong downtrend. And rather than waiting for price to sell off or for price to rise and you get in at higher or lower prices, we just jump in because we don't want to miss this big move. That's what strategy 3A is designed for. Originally, it was great for intraday trading the E-minis, but we have a number of students around the world who actually apply it to stocks, apply it to futures, apply it to currency pairs. So pay no attention to where it says E-mini on the graphic. It can be virtually used in any market, any time frame, in any direction. Now, here's an example in a stock trip. As you can see, we use a proprietary Bollinger Band setting, which we teach you what it is, and this started to take off. Now, what differentiates this from strategy one is that strategy one would wait for that sell-off to buy. This doesn't wait because it senses that it's going to continue going. And look at the nice buy you had while it was heading higher. It works the same way to the downside. Here's an older example in Win, okay? Now, where strategy one would wait for it to bounce and you'd sell higher, this says, you know what? Through the proprietary requirements of this method, it's going to go much lower, and most likely it's not going to pause, so it's better to get in now. And look at what happened here. So you don't have to wait for that bounce. You just get in because many times that bounce will never occur in strong markets. Now, strategy 3A, we're going to throw that in as well. Usually costs $695 as well. Guess what? We're not going to charge you that price either. We're going to discount that included with this great discount today. But we're not going to stop there. We're going to throw in 7 extra strategy bonuses, okay? These are great bonuses. We're throwing them all in. First of all, bonus number 1, we're going to give you the add-ons. That's the up and down arrows if you have TradeStation, Metastock, MT4, Sierra charts, NinjaTrader, or if you already have the PTS Primo charts, we'll give that as well, okay? Included with that, bonus number 2, you're going to get my full Secrets of a Stock Exchange Specialist course. This is a 3-hour video seminar where I spoke in Denver a number of years ago, where I spoke about many other different edges and ways to trade the markets. It was recorded. It's a 3-hour video seminar that's usually priced close to $1,000. We're throwing that in with a special discount as well. On top of that, bonus number 3, you're going to get the PDF version of my book. And my book, I talk about my experience trading on the floor, especially how I made markets and how I traded during the crash of 1987. This PDF is usually running at $50. We're going to throw that in as well. Bonus number 4, which I think is the most valuable bonus, is 6 months of our PTS Primo charting platform, okay, with real-time data. Now, this usually runs close to $900, okay? We're going to throw this in with a special discount. Now, once you get our PTS Primo charting platform, you're going to get our Secrets 2.0 course. This is where we take the Secrets of a Stock Exchange Specialist course up another level, up another notch with more advanced edges, more advanced ways in which to trade. Nearly $1,000 value. We're throwing that in as well. Bonus number 6, you're going to get our scanners on the PTS Primo charts. This is a way to identify the setups. So every night you can scan for strategy number 1 setups, and you can see what they are for the next day, okay? A $500 value that's being greatly discounted. Included with that, bonus number 7 is our multi-scanner. You can scan from multiple strategies at a time. So you can look at strategy 3A, you can look at strategy 1, you can also look at our buy-sell line scans and scan for all these things at the same time and find out what you're going to be trading for, what the highest setups are for the next day. At close to $700 value thrown in. So let's break this down, okay? You're going to get strategy 1, strategy 3A, 6 months of our platform along with all of those bonuses. Normally, this would run close to $7,100. We're not going to charge you that by any means today. Trust me, I wouldn't want. We only reserve this for the expos when I speak at an expo in Las Vegas or in Chicago. We're going to really discount this because all of our very valid attendees that come on a Saturday to see us all the time, we're going to discount this tremendously. Today only, we're going to drop it down. All these things, 2 strategies, 6 months of our platform, along with all those 7 different bonuses for only $297, okay? That's over $6,800 in savings. But this is only for a limited time only. Now remember, you're getting close to 40 years of information, things that I've accumulated in my 40 years for less than $300. And a year from today, you will have wished you became a member of these courses. Don't start out 2020 the way you did 2019, hoping for the best, and then at the end of the year saying, gosh, I'm nowhere closer to my goals than I wanted to be the last year. Get started in the right direction. Become a member of this special discount, strategy 1, strategy 3A. Remember, that's at over $6,800 discount for only $297. Here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. They're in charge of all the tech support with our platform. They're also in charge of our discounts and all of the different programs and specials we have, such as you're seeing today. Excuse me. You can email them directly or call them. I would probably assume calling them if you wanted to set up a payment plan. Now, $300 I know is very inexpensive, but some of you may not even be able to meet that. Well, don't worry. They can still set up a payment plan for a small discount. Call them up at 310-598-6677. They would be happy to work with you. Or if you're interested, maybe you already have strategy 1, maybe you already have strategy 3A, maybe they can put together another strategy. We have upwards of 10 different strategies, and you can discuss those over the phone. Now, that link you see at the very bottom is the link that will take you to the sign-up page. It's not a live link, but if you hold off for just a second, there it is. I just posted the live link in the chat box. Excuse me, I'm losing my voice here as we go forward. So if you go to the chat box, you'll see a live link has been posted, and you can use that to go to the sign-up page. Now, as I stated earlier, if you have any questions at all concerning what I just went over, anything concerning teaching or trading of strategy 1 or 3A, please, now is the time to ask me questions. You can just go to your question and answer box and submit them, and I will be happy to answer them right now. We have a good 10 or 15 minutes left. Somebody's asking, strategy 3A, it said E-mini strategy 3A. Can we trade it on other markets? Yes. I'm sorry, maybe you didn't hear what I said. You know, originally when we had strategy 3A, it was originally designed for the futures markets, intraday trading, because, you know, if you're an intraday trader, sometimes you get these tremendous moves in one direction. Let's say you're looking at a 5 or 10 minute chart, and strategy 3A is perfect for that. But as we've seen over the years, we have a number of students who have purchased our methods, and they say, Steve, I use this on weekly bars, or I use this on currency pairs, or I use this on Bitcoin. So pay no attention to the titles, because our methods now, we have found out over the years, when we first began, we didn't know if they worked on these other things, but now our students have given us testimonials and got back to us and said they work amazing with other markets. So feel free. Let's see, James says, hi, Stephen, I recently purchased the stock scanner package, have not received any login details. Oh, don't worry. All you have to do is contact our tech support. Now, I'm not sure if they are available right now on the weekend, but you can send an email or you can contact Pro Trader Strategies, like I said. Our company is built in two different formats. I'm in charge of all the teaching and trading of the strategies and methods. Pro Trader Strategies, as I said earlier, is in charge of all the tech support and all the pricing and discounts. So I would contact them. You can either call them directly or email them, and I'm sure someone will get to you. There's probably just been a backlog of people because we always have students signing up for things. But don't worry, if you're a student of ours, they will get back to you right away. Okay. And you're more than welcome. You're more than welcome, James. And once again, thank you for your patronage. I know you'll be very happy with the scanner package. That's one thing I have to say. And I know I've said this before on my other webinars. I just absolutely love our scanners. I use them on a daily basis, and I'm so proud of them because we specifically designed them to be extremely simple. I have a pet peeve with scanners. I've used just about every platform you can think of. I'm not going to mention any names, but I've used every one of them. And when I wanted to scan on a nightly or even on an intraday basis, I have had the worst time trying to figure out sometimes how to even load up a scan. I mean, it just has literally taken me days to figure out. And I called tech support and they can't explain it even either. I want to apply certain things and it's ridiculous. So when I developed the platform with Pro Trader Strategies, I said, listen, I want our scans to be as simple as possible, where you can have virtually any data you're looking at. If you want to look at an index in the United States, if you want to look at a European market, the DAX markets, the FTSE, if you want to look at Canadian markets, if you want to look at Asian markets, if you want to look at currency pairs, Bitcoin, all you have to do is click on a button and just choose whatever one you want. And then after you have it, just hit scan and it'll come up in a matter of minutes. That's how simple it is to use our scans. So if you're someone like me or someone like James who's looking for a simple way just to get your signals, that's what you're really interested in. You just want to see the setups and then you can do your own research and you don't want to waste your time. This is the right thing. It literally takes seconds, and we have different formats and ways in which to do it. So I'm really proud of our scans. The beauty is that's in this $297 package. You not only get the individual scanner, but you also get the multi-scanner as well. So that's always included. That's a great offer. So James, I'm sorry about the delay. Most likely there's a backlog of people trying to log in because we've had a lot of people signing up for our platform as of late and getting the scan. But don't worry, I promise someone will get to you, okay? Let's see, someone is saying, can we trade these, let's see, intraday? Yes, you can. As I stated earlier, you can trade these. And someone is saying, Steve, what is the best market to use strategy one in? Well, once again, Bob, that goes against our philosophy. I'm not here to tell you what the best market is because we have students that say, strategy one, the best market is a 10-minute chart of the euro dollar. That is the best market. It works all the time for me. Where someone else could say, no, the best market is our stocks on a weekly time frame. Now, is one right and the other one wrong? No. The right answer is the one that makes you feel the most comfortable. So that's the market you should be trading. Let's say if you trade it intraday, it'll give you maybe 3 to 5 setups a day. Well, someone who likes to trade on a weekly basis would say, I can't trade that. That's too much. I can't watch that many trades. So does that mean it's better on a weekly than it is on a 5-minute? No, it means that you're out of sync with that because it's not good for you. So there's no way I can tell you what the best market is or the best time frame. That's up to you to decide. You see how we've all been conditioned to ask someone, well, tell me what to do. Tell me what I should be doing. That's why most traders fail. Our job as an educator is simply to point you in the right direction, work with you so that you can make that decision. I want you all to be consistent traders. It is in no way going to benefit me if you make $100,000 one year and then the next year you give it all back. What type of a teacher would I be if you're losing money and you're in the hole worse than you were the year before? That's not a good educator. A good educator is someone who's able to teach you so that 10, 20, 30, 40 years down the road, you're still able to trade. That's what consistency means, and that's what we're trying to do with all of our methods, okay? Okay, so we're right at the end here. I think that's about all the questions we have. Oh, one more question from Carlos. Have you tried the strategy with Bollinger Bands? Yeah, and remember, as I said earlier, it must be used with the Donchian channels. It just does not work the same way. It doesn't have the same type of results. So I really wouldn't try it. You can experiment, but trust me, you won't get the same results. But the good news is, if you take advantage of this $297 offer, you will get the automated Donchian channels already pre-formatted on our platform. You have 6 months of that. So that's great. That's a great feather in your cap. It's already there. That's why we provided, and that's why we developed the platform, so that you wouldn't have to go searching and looking for ways in which to apply this when you don't have use and access to the daunting channels. It's already pre-formatted. There's nothing you need to do. You just click on strategy number 1 and it's right there, okay? It's really simple. Traders have told us that our platform is the simplest platform around, and I designed it that way. I didn't want you to waste your time trying to figure out, well, where's this indicator? Well, how do I use this? We made it simple so that you could focus on learning rather than trying to figure out how to load up a chart, okay? Because I've been there before. I don't want you to go through that. As we conclude, I just want to say thank you for taking time out of your Saturday morning. I really wish you learned a little bit today. Please remember, if you're going to experiment with this on your own, feel free to, but do not jump in with both feet on Monday. You must paper trade for a while before you really start to trade this, okay? As we conclude, once again, thank you for taking time out of your Saturday morning. I hope you learned something, but most importantly, I really look forward to you taking advantage of the special offer, which is for a limited time only, $300, less than $300. You get all this information, and I'll be there with you every step of the way, teaching you as well, okay? Thank you so much. Take one last look at our disclaimer. Have a great weekend, and I'll see you next time. Bye-bye.